And it looks like we are live. Jory, do me a favor, check the Facebook group.
Yeah,
And
I'm checking Facebook and YouTube. Are you on YouTube?
I'm gonna check YouTube real quick. Let's give it a few seconds for everybody to come on board.
You tagged me on it, Kev?
Yes, sir.
All right, so I sent some emails out to some people.
And
It's on it's on YouTube.
we're on YouTube. Yep, we're live. Perfect. Are we good on Facebook?
Yeah, we're good now. Yep.
All right. Can't post to some destinations. Beautiful. All right, my brothers, what's going down? Another episode of Shut Up and Invest live every Wednesday at 1 o'clock. Now with this new climate of coronavirus, I got my man in the house, Jay Money, as always. Jory, what's up, brother?
What's going on, Kevin? Man, I'm doing good. Just adapting to this new normal we got of being in the house most of the day, working from running. How was your Easter?
Good, bro. We did a little virtual Zoom Easter with the family. That's like the new vibe now. And and I did get a chance to reach out to our guest today, a brother from another mother, a man with vast experience. And we've been talking about having him on the show for a very long time. And I'm glad that we have him on now, especially with the craziness that's going on. It's almost like the timing always works out the way it needs to. And we got Ray in the house, Mr. Ramon Gonzalez. What's up, my dude?
What's up, guys? What's up, Kev? What's up, Jay Money, man? Just happy and grateful to be with you guys today, man. So, Kevin, proud of you for becoming a dad now. So I'm really excited for what's unfolding.
Yeah. There's always rays of sunshine in the middle of the storms, and I think that's kind of what we want to talk about today. We want to talk about, I know all three of us here were involved in real estate and business and in the finance market during the 2008 crash, and we're starting to see a lot of the similar signals, and that's kind of where I want to have this conversation. I don't want to make it super doom and gloom, but we do want to have awareness and consciousness and talk about the rays of sunshines within those warning signs. And I know, Ray, you were definitely one of the major players in my network that took a full advantage of the swing of the cycle back in the last crash, and it's allowed you to have the lifestyle with your beautiful wife and daughter, and you have now a podcast where you talk a lot about it called Both on Board. Definitely one of my top podcasts that I listen to, and you've been able to build a life by design because you took a situation like we're currently in right now and a climate that we're in, and you knew how to navigate the waters and take full advantage of it. You recognize the signs, and with that experience and exactly what you were able to do, now you live a beautiful life by design with your daughter and your wife. And tell us a little bit about that, and then we can get into the specifics.
Sure. So, we started doing fix and flip, buy and hold in 2005. Before that, I worked corporate for GE. So let me give you a background on me before we get into the economic stuff. Economics has always been one of my passions, market cycles, because I learned this from Wayne Gretzky and Tony Robbins. Great people can anticipate the market. Great businesses are anticipatory. They know what's coming, so they skate to where the puck is going, not where it is right now, right? And again, this is not about timing. This is just about using reasonable caution. Hey, 6 months ago, Kevin, if I asked you or Jay Money, in the Miami market and real estate overall, we were close to all-time highs. Like, you didn't need in the stock market, you're close to all-time highs. So you didn't need a rocket science to figure things out. Now, does that mean, hey, step out and be fearful? No, just proceed with caution, right? And what I call reasonable caution, what that means is, dude, you look at the cards you're dealt with, right? So you look at those cards, you don't make it worse than what it is, and you don't make it better than what it is. You call a spade a spade. And then once you can do that, but that's hard to do for guys like us generally that are very positive, right? We always want to see the silver lining, and yet there is always a silver lining. And look at the spade the way the spade is dealt to you, and then deal with that. And if you get a new card, then you can change your mind. But you got to deal with what is. and then anticipate where it's going. So that's one. So economics has always been a passion of mine. Study market cycles. We've made all our wealth from Kevin understanding market cycles and anticipating what's coming. Now, am I going to tell you we made money on every single deal and we got in and out perfectly? No, we left a ton of money on the cycle, this cycle. We got hit last cycle. So the first time you get hit with the market cycle, it's kind of like Kev, like you went through it in J Money. It's like a punch in the face. You have fear. You don't know what you deal with. You don't know what's going on. You don't know how to shift. You don't know where to shift. You don't know what's coming. So you're kind of dealing with it day by day. The biggest thing you can really manage, not even control, is your own mindset. So the biggest thing I'll share with you guys is, what are you using this time for? This time of quarantine, are you using it to, I just saw an article on Forbes that a lot of people are watching porn, YouTube videos, high on weed and alcohol and eating junk food. If that's what you're using this time for, that's not going to work out well for you. If you're using this time to grow, to develop your faith, to heal, to plan, to strategize, to build your business. Guys, I've filed unemployment twice in my life. First time, I was going to school at FIU. The government got hundreds of thousands of dollars return on that unemployment. I took that time, educated myself. I'm not here to brag or boast. Just what happened is I graduated in 3 years instead of 4, summa cum laude, got a job at GE doing economics for them, and I paid thousands of taxes, and it boosted my career. Second time, when GE laid me off, I built Summit Home Buyers. And with Summit Home Buyers, they made a huge return. I've paid millions of dollars, the company, in taxes from Summit Home Buyers. So what I'm sharing with you is this can be a blessing if you use it to develop a skill.
Definitely agree. We've been saying that same thing. I mean, the mindset is what's key right now, right? If you watch news all day, if you fill your mind with negativity, as a man thinketh, he will become, right? So whatever you're thinking about is what you will become, right? So we said that last talk, now's not the time to watch Netflix and Hulu and binge watch every TV show and then go to CNN and go to Fox and go to Facebook. Stuff will drive you crazy, man. It literally will drive you crazy, right? You gotta actually, protect what you're putting into your mind right now, right? Listen to people who've been through it, right? And then plan to strategize.
I mean, well, J Money, I love what you said. I mean, I've been reading a lot of Jesus stuff lately, whether it's through something someone channeled from or the Bible, and he says you judge a tree by the fruit that it bears. Right? No good tree can bear bad fruit. No bad tree can bear good fruit. Right? So,
let's pivot over to some of the latest news and kind of get your guys' reactions on it. So on Monday, you heard that Chase changed their residential guidelines on lending, where now the only mortgages that they're willing to take on, and we're really talking about the risk, factor that they're willing to take on, is someone who's got 720 credit scores, 20% down, and reserves, meaning X amount of months of that mortgage payment that's going to be in their bank account after they qualify and close on the loan. We had
6 months. Is it 6 months reserve?
Usually, it's about 6 months reserves that they're looking for.
Hold on, let me back up a 7 and give a little bit of a macro of what I think is going to unfold, because I think it's relevant. I think what you had last cycle was a real estate driven depression that then caused everything else. I think this cycle, Kevin and J Money, correct me if I'm wrong, a lot of the underwriting compared to what happened last cycle has actually been pretty safe. The banks are actually well capitalized. I think that the real estate market is strong. And let's not get it twisted. Real estate has become a debt-driven product. So here's what I think happens this cycle that is different. There's a ton of corporate debt, a ton of student debt, a ton of pensions that aren't going to be fulfilled. And as this debt is not able to roll over, that's going to affect the credit markets, which will then have to affect real estate because a lot of real estate is debt-driven. So real estate won't lead this, but to say it's not going to be affected, I think that's ridiculous.
It's going to be a casualty of war.
Yes. But whereas last time it was in the forefront, right? It was leading the charge.
Yeah. I think it's important you said that though, because I've been seeing a lot of real estate agents and investors who, and I'm sure we'll get to this, because the market was so strong before whatever this happened, they think because it's only an issue with the virus, where they don't realize that the economy itself was teeter-tottering before the virus hit, right? Real estate was good, but the credit markets weren't as good as you think if you actually look at the underlying, fundamentals. So I think people are gonna get surprised by the market getting affected because they thought, oh no, real estate's fine. When it opens back up, we're good. They don't realize that real estate's one piece of the whole credit market cycle,
everything, guys, everything in real estate is priced off the bond market. As soon as you have a yield inversion, which is what happened, the whole yield curve inverted. So you could lend out money to the U.S. government on a 3-year treasury and make more than what you could lending it out for 10 years. That doesn't make any sense on a curve. It's kind of like you want to see that curve. So now what's happening is, and the yield curve is usually a great predictor so far, is the best predictor we have of an upcoming recession in the future. So really, guys, the bond market drives everything.
Yes. 1,000. And I think the reason why I want to make sure that on this episode, we really get into what the news is showing us is we have a lot of real estate investors right now that are sitting there expecting the flips and everything to go right back to normal as soon as this virus is done. They're expecting to be able to still sell the house that they currently have on the market exactly at the same prices. They're holding on, and kind of I want to not give them the gloom and doom, but a little bit of a, warning sign of reality check of what happened last time.
A little wake up call, a little love wake up.
Yeah, exactly. So
on the Chase thing, I saw that same thing. Now, are they keeping their they have like a lower credit score program that I saw? Is that only
right now it's 720
across the board?
I thought it was. So let's back up a second. So now watch. This is for conventional.
This is for their conventional, and they're basically and I imagine they'll consider other programs if they're going to find that same credit box, if they're going to fall into that same credit box. For example, all the other lenders for FHA, which is very important for the flip game for a lot of us that are in that FHA.
Let's not make things up. Let's go one at a time so that we can walk them through this. So conventional, usually above the price of FHA. So you're not dealing with the median, with the entry point, which has always been more demand for because no one is building that product. So you've got a conventional buyer that before could put in 5%. And what was the minimum credit on that, Kevin?
620 credit score.
625%. Now they have to have 720. So a jump of 100 points and an additional 15% down plus 6 months reserves. So correct. I spoke with my man, Kevin, and just give me some numbers, ballpark. If you had 100 people that used to qualify for conventional, 10 qualify now. Is that accurate?
Yeah, definitely. 100%. So
now you've got a huge shrink in demand. Mm-hmm. Supply is increasing. Mm-hmm. What's going to happen to price? Play this out.
Yeah, supply is increasing.
Hold on. Let's get the magic. We haven't even got into the unemployment. If you're unemployed now, you no longer qualify to get that mortgage. So now instead of it being 10, it's just 5.
Yeah. No matter what your credit score is, if you're unemployed, not gonna happen.
And we'll get to this later on, but that right there is why creative financing is going to rule the day coming up soon, really soon. Creative financing is going to be one of the biggest games in the market because a lot of people who used to be able to, like, let's say that 110, that 90 still has a good job, right? Or let's say 50% of a good job, they still can't qualify for a house anymore, right? By conventional or FHA. So creative financing is going to be the new tool to help them get into a property.
J Money, I did a bunch of creative financing on the way out. Here's what I'll tell you. Creative financing works a whole lot well when you have a product that you can sell creatively under FHA limits that you can still positive cash flow. But if you have a house that's $400,000, $500,000, $700,000, brother, it's hard to make that house cash flow, and you're probably paying hard money on the debt. Those numbers do not work.
Yeah. I totally agree. Yeah. Let's say that we're talking about the cash flow lower markets where it makes sense. Yeah. If you're in those higher markets, if you're in Miami right now, it's hard to do any of those kind of deals. We're talking about 350, 400,000.
Or even if you're in a market like you're in, where it's not a sexy market, but it's the price point driven, right? Once you get to a house $700,000, you just can't cash flow it for enough to cover your mortgage and then make a profit. Correct. And to offset all the drop. Those houses that are in the higher price points above FHA are going to drop more relative to the FHA entry level demand price point because they have more room to fund. There's less demand.
Exactly. Yep. Yeah. Me and Kevin said this months ago that we said this back in the spring. Right now would not be a good time to be in that market, that was higher than FHA, luxury and then high end markets. We stopped, looking at that stuff a long time ago. So
yeah, the jumbo market from the lending perspective right now is at a standstill. Big dogs like Chase already made the first move. I expect a lot of the big boys to follow. And that's in conventional and that's in the jumbo market.
So hold on.
Now,
So let's get the price of the conventional and jumbo. Guys, if you already bought this product and you don't want to hold it and you don't want to move in, get out.
Get out.
You're better off getting out and breaking even or making a profit than taking a loss later on. Because if your goal was to get in and get out, get out. Would you guys?
I would even take a hit if I can get out fast and the hit is not going to break me. Because here's definitely what I want to say. Guys, I pray that there's a miracle and there is a recovery that we didn't see coming. Listen, I hope that I'm completely wrong.
Me too.
Yeah, we are.
Now, if we're talking about Ray's dropping some knowledge, break it down so it's plain English. If I lose 10 to 20 grand on a deal and that's not going to break my personal finances and my business finances, and in 2 months, 3 months, we're back to normal, miracle of God. Hey, I can recover, keep it moving. And you know what? I played it safe. But if it gets really nasty and I try to hold on and now I'm stuck on that and that's going to bring down my whole business because I couldn't get my...
And now you're down 100, 200 Gs because that market turns like this. Now you can't sell it. And now you start dropping price. Now you're chasing the market and you're dropping price, but the market's dropping faster than you. Now there's less buyers. The more you wait, I'd rather you take a punch in the face right now than get slaughtered later. What do you want?
Yep. The higher you go up, the more you can fall down, right? So, and Kevin knows this. I had a hotel property that we closed right before this happened. That we were fixing up the hotel, a quick fix up, right? It was on the market. It was the only property I had on the market. I don't want to hold anything on the market right now. Anything. We pivoted, sold that property basically for break even, right? Like within a week because it's all about time value money. First of all, we got some cash back into the coffer that we can have there to be able to use to buy more deals that come out that are cheaper. And I don't want to that probably can reduce price by 10, 15 grand a week when it starts hitting really bad. So get out of that stuff. You don't want to sit and hold on to it.
Well, J Money, not just time value of money, what I call risk reward. On these higher end properties, every single day that happens that Chase deals you a new card, you're taking on much more additional risk. So what I look at things, does this new change give me reason in the present moment to be reasonably cautious? That's the first question. If the answer is yes to that, then how has the risk profile changed? If it's changed materially, which in this case for that product it has, then I have to adjust.
Yep.
It's just that simple. Like, what are we talking about?
The key thing is too, what you're saying right now, but this is all your mindset, right? If your mindset's not focused, clear, where you can make these decisions in a quick of a dime, you get stuck, right? How many people right now, their mind is clogged. They're thinking about all these other things about how can I adjust my business right now to make sure I'm putting myself in the best situation, right? We saw it in 2008. People just held on to stuff because they were so focused on the fear, they couldn't actually think clearly to make the right decisions for their business.
Well, they thought it was going to get better. They stuck the head and said, "Oh, it's going to come back. Yeah, it's going to put you out of business." Guys, I saw guys with hard money portfolios of 50 million go get a job when it's over. So I saw guys that live in my own neighborhood couldn't take their kids skiing to Colorado. A family tradition be broken. It hurts my heart. I know these guys. Now they made it all back. So the backdrop was that some of them did. Some of them are still working a job.
Yeah, and I'm getting calls every day from people trying to figure out, can I pull out a line of credit on this property to hold me over, to wait? And they're talking about ARVs are still 300, ARVs are still 400.
They're skating where the puck was. They're not skating where the puck is going.
Correct. Exactly. 1000%. And what they don't understand is that right now, the money is not looking at your ARV the same way you're looking at your ARV.
Mm-hmm. Definitely. Yep.
Amen.
And that's the biggest message I want to take away from today's episode, that you're still stuck on 3 weeks ago.
Mm-hmm.
You got to be looking 3 months from now. That house, especially if you're in the higher end, might drop 20, 30%. So get ahead of that now.
Yeah.
And get showings. And then, guys, be engaged with these properties you're selling them. If the buyer goes through, I want to know what the feedback is. I want to know what's going on minute to minute, day by day. I want to make adjustments. Why is it not selling? What's going on? And then if you do get it under contract and the price is in the price you like, be willing, if the buyer's strong and he qualifies, push the closing date to close sooner. Push the appraisal and inspection sooner. Make sure it actually closes. Guys, Kevin and I have been through, and so has Jay Money. You know, hey, we're going to close on Friday. Hey, cool. We close Friday. Hey, you know what? We close late in the day, but don't worry about it. We'll just do a wet close. You know, we'll close wet Monday, close Friday. Come Monday, you never got funding and you never got the money. This happened in 08 often.
You sign documents saying you're closing, and the wire never got there.
Yep. I just said
that. Give me 1 second, Jimmy. Do not, because I see this often. Someone will say, it's under contract. Oh, it's sold. Nothing is sold until you actually have that money in your bank account and it clears your bank account.
Yeah.
Guys, understand that. I'm not trying to put fear in you, but now is the time to be involved with these closings and engage and actually make it through. The buyer is more powerful than the seller in this market. It already changed.
Yep, understand. I was gonna say the same thing. Same thing.
Now, here's the other one that I posted today. I don't know if you guys can see that, but JP Morgan and Wells Fargo both announced that they're building their reserve account. So JP Morgan Chase is putting $6.8 billion to protect against a wave of loan defaults. And Wells Fargo is putting away $3.1 billion to protect what's about to happen. The shoe's dropping. They're expecting massive amounts of loans not being paid. What does that mean today?
Well, I mean, I think it means, great point, Kev. I think you have two things. Anyone who bought a house in 18, 19, conventional 5%, that's a realtor commission. You don't have any equity.
There's no equity.
I mean, that's a default right now. And if you're FHA, it's 3%. I mean, if you got unemployed, I mean, I don't know how you don't see that going into default right away. That's
what they're saying. They're preparing for unemployment, right? They're preparing for unemployment, and then unemployment is going to cause, you know, defaults in the payments, and you can't sell that house because they know the market's going to drop, right? So there's a lot of people with no equity. There's been how many? You said before, we've been at historic highs in price, right? Historic highs, historic home sale. It's been going up for a long time. All those homes you bought 17, I'll say 17, 18, 19.
I'm with you. I was just, Jory, I'm positive.
You know, that equity is going to be gone in a heartbeat, man. Like, we've got equity appreciation is like, it's a fictional thing that people, if you base your model of appreciation, it's fictional. We'll just say that it's there and it's not there, right? You can't base
what the market giveth, the market taketh.
So they said JP Morgan had the I think they had the biggest drop or decline in income, and most of it was tied to that reserve they built up. Yeah, they're preparing. They know what's about to happen. Their liquidity is going to dry up. You know, they're about to have a lot of loans in their book, and they're making sure that they're capitalized the right way because they've been through this before.
and guess what? You know who else has been through this before? The markets, the local judicial foreclosure. They've been through it before. So guess what? When these defaults start happening, and guess what? The banks have been through this before. So yeah, the banks might try and work it out. But if you think you're going to live in your house for 2 or 3 years rent-free and collect unemployment, I think you have something else coming.
And that's key because I remember I sold REOs like exclusively during the last, housing crash, and banks were going through it to see the pants. They did not know what they were doing, right? It took them till about 2014 to figure out what they were doing. That's why there were so many amazing deals, because the banks didn't know what they were doing. They know now. Okay, they know now. They still have inventory that they've been holding from the market for years, right?
The shadow market, yeah.
They've already been fined for all the document issues that they had before. It won't happen again. They're not going to give people free passes this time. They're preparing right now for what's coming.
And a lot of the laws, I don't know if you remember, from 08 to 2013 were changed in the judicial system so that all these defenses you could file, the banks already wiggled them out. You can't no longer go statute of limitations. You can't argue all these things. So what I'm saying is we have a much cleaner, robust system to purge this stuff.
100%. Now, here's another shift that's recently happened. FHA market. The FHA lending guidelines. Before, you can buy with as little as a 580 credit score. They quickly took action and pushed it all the way up to 640 across the board. And a lot of lenders have put what they call an overlay on top of that they're saying, I don't even want anything unless it's 660 on an FHA. So now what happens to the market, or what we call affordable housing, that no longer can you buy anything unless you have minimum 640 credit score.
So 640 score, but let's get into that. So it went from 580 to 640. That's what, 140? No, that's 160 point jump.
No,
and
no,
really
580 to 640, that's 80 points.
80 points. But really you're saying 660, so it's really 100 points.
Correct.
Right? Because the marginal files don't get done. So in addition to the 100-point jump, what happened to DTIs?
They're tightening up because they're depending on DU, and I'm already seeing that as we're running DU approvals, all the ones that we used to get when we were stretching approved without a problem.
Kevin, tell them what DU is and DTI is.
And guys, let me back up a second. The reason I know these terms, I'm not a mortgage person. How do I know these terms? Because in 08, I had to go learn this stuff.
Exactly.
Because you had to be willing to work with these buyers and understand the ratios and the terms, because that's how the buyer and the financing become much more important.
Right. So it's desktop underwriter, which is basically the first line of defense for banks. You got to run it first through this online application, and that needs to say it's approved before it actually moves to the live underwriter, who's the one who actually stamps it and takes the responsibility for the bank by saying, yes, this person can buy this property because I physically checked out all the paperwork and it matches what went into this online system. So this is what we call a DU. And that's the first line of defense, that if you can't even get an approval there, you can't push it to an underwriter to get. And
whereas before you could have had some exceptions, you could have done another way. You had other offsetting factors, whatever they call it, compensating factors or whatever.
Compensating factors.
Yeah, you don't have that anymore. Mm-hmm. The guy qualifies or he doesn't, black or white.
It's all automated now. Yeah, there's no more local bank. Hey, I come in there. Hey, you know me. You see me all the time. Can you help me out? No, you have to get to that DU first to even get to that position. And DTI is just debt to income ratio.
Debt to income ratio.
So yeah, if you have two borrowers, and one has a better DTI, that guy's going to get done a lot better.
Yeah. And again, remember, you need to be working. They're doing employment verifications till the day of closing. So, I mean, I've continued to lose every single week deals in the pipeline that we've had because people got laid off or got furloughed or took 25 to 50% pay cuts, that they're still working, but they're not making the same amount of money. That's the current climate as of today, completely changing the game.
And if you're working day to day and you have a house under FHA, what he's really telling you is do not delay on any times. Push contracts to close sooner. Like, get the appraisal out there. Time is not your friend right now.
Correct.
FHA, I mean, that's the flip market right there. You know, that's the majority of the flip market right there. You flip your house for FHA regulations to find that buyer. And so, I mean, if you got deals right now that you were planning to flip and sell, your buyer pool just shrink by a lot.
Right. So your buyer shrank for a lot of reasons. One, the 100-point jump in credit. Two, they have to actually go underwrite through the system. Three, a lot of them lost jobs. So if you've got a house where you're close to pricing it to that FHA price point, I would take the hit now and price it at that FHA amount and open up the buyer pool, because I believe that affordable market, there was more demand before this going into that affordable market. There's no new construction and there's still a lot of demand, but you're going to have a lot of supply come on the market too, for the same reasons as before. These lower end, more blue collar are the first to go. So you're going to have a lot of foreclosures. You're going to have a lot of people lose their jobs. So again, you have the same thing on both sides. I think that if I had to choose and I had a house to sell, I'd much rather have the FHA house, because as Jay Money said, I have other options. I can sell on owner financing. I can still price drop and get FHA. I can rent it out and refinance, at least get my capital back and hold it. So you have other options you can do on that lower end, not lower end, but you know what I mean? FHA still
a lower end price point. Bottom line, it's a lower end price point.
It's affordability, guys.
Yeah, affordability. Yeah.
If we're talking about, I'm currently right now holding on to properties that I'm in the middle of trying to flip or trying to figure out what I want to do. You just pointed it out. Let's really walk through here. If I'm somebody who's got 1 or 2 projects, and let's say they're in that lower price point, depending on which market you're in and which state and city you're in, and I can qualify for FHA, but they do not rent to cover what my cost of the money is right now, because maybe I'm in private money and maybe I'm paying a premium because I wasn't using my own money, and now it won't cover all the cost. So I'm in a situation where I'm in a project that doesn't qualify for traditional financing because we haven't been able to rehab it yet, because maybe I can't get inspections done because the courthouses are closed and whatnot. And we're halfway through that project. I can't rent it either. So I'm stuck on that deal. And I was trying to make 30, 40, 50 grand. What do I do?
You wholesale that sapsucker.
Get out.
Get out.
Get out and have someone else who can deal with it take over.
Guys, this is it goes from weak hands to strong hands, right? Like the story of the Bible, right? He gave the guy 5 golden coins. The guy came back with 5 coins. More shall be added to you, right? You take that 1 coin and you don't know what you're doing. This is what's going to happen. You're going to have to get out. And then the worst part is you want to get out and salvage that relationship with the lender. That's what matters right now. If you destroy these relationships, oh man, you're really going to struggle, because now the word goes around.
Yeah. Ray, we talked last night. How many guys you already know personally, and as do I, that are refusing to accept that L? They don't want to, wait a minute, I'm going to make 40. This Corona thing's going to be done in 3 weeks. Like, I'm going to hold on to this property. I'm going to figure out how I can, how many people are refusing to accept the numbers and the news we're just discussing right now?
Dude, rule number 1 of personal development is you have to accept and allow what is. If you're not accepting what is, what are you doing? You're trying to make it the way you want it to be, and that comes from a control fear place. The way to the kingdom is allowance. Allowance is the doorway to the kingdom. This is what it is. Accept it. It is what it is. What are we talking about?
Yeah.
You want to deal with the and I'm not saying right or wrong, but if you have a project you can't make progress on and you can get out and pay your lender.
And I guess I think with either people aren't doing what we're doing. Is we wake up every morning, we read the headlines, right? Again, we're not watching news. We're going to find these headlines, the Chase headlines, the FHM, the headlines that affect us. We're reading reputable sources. And when you do that and you kind of
one second, your money in there. Guys, I'm looking at data. I'm not looking at drama. Don't give me the story. Give me the cards. I can fill blanks. Just give me the freaking data.
Right.
The numbers don't lie, right? I think people are actually sitting back and like, oh, this is going to return to normal as soon as business opens up. No, banks and investors and hedge funds and Wall Street, they don't just return normal. They're what is it? They don't want to have a lot of risk involved in things, right? So when they see a high risk, they pivot quickly, right? And they're not going to just change right away. It took a long time for lending to open back up from 2008. Lending freezed.
What happens right now is credit is being repriced. And no one knows where that credit is going to reset. Excuse me, not credit, risk. Risk is being repriced. No one knows, like, for example, the reason we're not lending right now is I cannot price the risk. And if I can't price the risk, I sit on the sidelines. I don't know where this is going to drop. Now, I'm not trying to time the market, but right now, unless something is a no-brainer, it doesn't make sense, and neither can they. And when these Wall Street loan programs, when they backed out, they're not coming back. Most of them are not coming back. The Goldman Sachs, the Genesis, these boys, and if they come back, it's going to be much different terms, much lower LTVs, and only the best borrowers that actually fulfilled and paid are going to be able to get some of that money.
And let's stay there. What you're talking about is a lot of the institutional money that's been driving this market has been from Wall Street, right? Wall Street came in like never before and started loaning. They created programs for private financing, institutional money. That was a big portion of why investors could go out there, right, and do that has been done for the last 10 years. So you need to raise private funds, first of all, from private money. If you don't know how to do that, you're in big trouble, right? Because those
and that comes from the relationship, J Money. But if someone was a wholesaler and they're fixing and flipping, and they go to a Kevin and say, "Hey, Kevin, can you connect me with Genesis Capital? They're lending at 8-1, 90% of purchase, 100% of rehab, and why go to the private sector? Why have relationships? I got this money over here. Guess what? Game changed. Now what?
And how many people burn bridges with their relationships
for a point or two?
For 1%. For oh no, they're giving me 8.99. Okay, call me when the corona. Call me when you got a corona in your hand.
And the weird thing is, I've gotten some calls from those guys, and I'm saying, "Yo, brother, I forgive you, and I'm here to help you. But I saw how you dealt with me last time. Why? I've got those who've been with me forever. I've got those who've been faithful over few. I've got those who've been with me since the get. Why am I gonna go to you now? I don't know how you perform. You just talk a good talk."
That's key. And now is not the time for you to take a risk on somebody new, right? Now you have guys you've been dealing with that's been there. You want to see a track record. And
listen, what we just said is across the board from the smallest of smallest to the biggest of biggest. Everyone right now is going to say, hey, experience, track record, and liquidity.
Amen.
So if you got to right now go liquid as fast as possible, because good deals now there's still going to be money out there, but you got to put a lot more skin in the game than you had to 4 weeks ago. And you got to know what you're doing, and you got to have the relationships that believe and can support and are going to be able to make that happen for you.
You got to be better at exiting. A lot of guys the market shifted from, hey, if you could find a good deal, then the exit take care of itself. Now it's the other way around. Good deals are going to be everywhere. Can you exit, and can you buy low enough and sell below market on the way out? So if you're usually buying at 70% ARV, you got to be buying at 50% ARV to sell at 90% of what you think today's price is.
100%. So now let's walk to the next reality here. The PPP programs, the commercial situation, the SBA bailouts. It seems like we're all paying attention to how the government is essentially bailing out small business, commercial financing, and everyone right now that's stuck not being able to make payroll and not having revenue come in. The reality is, even people, and me and Ray were talking about this yesterday on the phone, even people that you are sitting with feeling like they are ultra successful because they have the 4 laundry mats or the 9 daycare centers or whatnot, are scrambling right now because they were not managing themselves with the right liquidity and reserves and really paying attention to what was going on. They were doubling down and betting, and let me extend myself. Maybe they shouldn't have opened up those extra 3 daycare centers and kept more reserves and liquidity on the books. And now they are facing, no matter how successful the business has been over the last 7+ years, now they're facing the situation that if they don't get bailed out, and here's the thing, these loans are covering you for 8 weeks. What happens in 8 weeks when I can't bring people back to my restaurant, or I can't bring people back to the daycare center?
Well, let's walk that out from an economic standpoint. Let's say they do get this money and these loans, right? When you open back up, are you going to go back to full capacity? Heck no. You still have to keep some kind of social distancing, but your fixed overhead hasn't changed. You still need a cook. You still need a fixed overhead. So you've got a lot less revenue, same fixed costs, and let's assume that the business has no leverage. You're not going to be profitable. And if you have leverage to that business, meaning that business is borrowed, like a lot of these corporations have borrowed, you're negative. See, leverage is a beautiful thing, but when she turns on you, it's nasty.
Yeah, I mean, we're talking about the small businesses. Guys, big corporations in America are broke.
Ford got downgraded.
Yeah. I mean, do we realize the Federal Reserve just broke the Fed Act by saying they will buy junk corporate bonds? That was in the act when the Federal Reserve was created, that you cannot buy junk.
They had to change it. It was insane.
You're buying insolvent companies that should be let to go burn. The whole company from big to small has been running on, we got credit. Let's just keep going. And now basically the Fed has to bail out everybody.
Well, here's who the Fed's not bailing out: the small business. Ford will get a bailout, but your local taco shop, that's not happening.
No, no.
So again, I think we've made the point that even if we're allowed to go back outside in 2 weeks, 3 weeks, 40 days, whatever it might be, the ripple effect behind this is still going to be where we have to figure out what that means for us in our real estate business and our personal finances and our bottom line 100%. So now that we've established that, I think we've
yeah, but let's back up a second on PPP, because people think PPP is a lifesaver. Guys, it's 8 weeks. We didn't apply for it. So one thing I want to share, and I see a lot of it in my market, is if there's not a need, don't apply, guys. Like, what are you showing the universe? Like, this is going to come back to you. If you're applying because you can try and get an angle on something, you can try and figure something out, dude, don't apply. Like what is the energy behind you applying? If you actually need it and you're going through a hardship, apply. What I see is a lot of people applying with multiple companies, trying to get what they can, thinking this is a free-for-all. That energy is coming right back at you.
Yeah, thinking they don't have to pay it back.
Huh?
Thinking it's free money. Thinking they don't have to pay it back. It is a loan. And that's another challenge that banks are having right now with the SBA, because the closing guidelines are not clear yet, which is why funding hasn't been released. The forgiveness policy is not 100% clear yet, which is why funds are not being released as well. So here's what happens.
Guys, no one that I know has gotten a single check.
Yeah. The lending institution, let's say I give you $50,000 for the next 8 weeks so you could pay your team, your rent, and cover for the next 8 weeks. Okay, not a problem. You got that money, right? 8 weeks happens, you're not back in business. No revenues coming in, because for it to be forgiven, you got to keep that team together. If not, now you got to pay that loan back. Okay, fine. At 1%, guess what? The bank is not making money carrying that debt at 1%, especially if your business stops paying them back. Now they got bad debt on their books. How much can these lending institutions that are rushed by the government and the politics to push out this bill that was passed, how much of that bad debt can they maintain on their books before we really have a major issue?
Well, let's back that up. What happened last time? Banks got all this liquidity. The Federal Reserve said, hey, zero margin requirements, so you can lend it out. What did the banks do? Hold on, Mr. Fed, you're going to give me a bunch of money, and I could go loan it out at 5% and take business risk, or I could lend it back to the government at 3 or 4% and play the yield curve game and make money off the government, off their money.
That's what they did.
So the reason you didn't get inflation last time is because the money never got the velocity. The money has to move through the system. Right now, you've got a dead corpse. There's no velocity of money. So these people thinking we're going to have hyperinflation or inflation. You need money velocity. You don't have money velocity. You have money printing, but if it doesn't speed up, you've got deflation. 100%. What does deflation mean? Prices dropping, income dropping. You have fixed debt. Deflation is no good. The U.S. is trying to avoid deflation like it's going out of style. Much worse than deflation would really be disastrous on the country, much more than this coronavirus.
100%.
So now how do we take advantage, now that we see all the signs, now that we know we've been through 2007, 2008 again, we're starting to see this is familiar territory. Now, as investors or as people that want to get in the game and take advantage because they know that someone like Ray, someone like El Primo made their money in these last 10 years. How can I position myself? How can I take advantage? How can I not let this stuff scare me, but instead motivate me so that in 10 years, I can be pulling somebody else up and teaching them about cycles?
I think one of the biggest things is study history, study economic history, study economic people that actually did great during this cycle. Joe Kennedy, no one knows who Joe Kennedy is, and he's one of the guys that really inspired me. If you read his autobiography, he's the guy who started out with $4 million in 1929, turned it to $150 million by 1934. Dude, his family is royal. I mean, dude, in this country, right? This is the dad of JFK we're talking about, right? Like that to me is like amazing how someone just rewrites their stars like that. I mean, that's epic, right?
What you said is amazing too, right? Because I told Kevin, I've been reading a book. It's called Black. It talks about the Black America's history. This is like Reconstruction era, right? And the one guy in it made his money during the malaria breakout in Memphis in the 1800s, right? Malaria broke out. I read this a week before coronavirus hit, right? When you read that kind of stuff in your mind, you can look at it different because you can see, okay, this person. So books in general is a good way to focus your mind on, okay, how do I do this? Because somebody did it before, right? It takes the fear away. You have a real life example of how someone has came through this before. You apply that to you. So I think reading books, especially history books, that's all I do. I mean, that's so important right now.
History, guys who made it through it, economic history, because again, history doesn't repeat itself, but it does rhyme. So if you understand what's coming, you're much better prepared. Does it play out exactly the way it did? No, but you're prepared and understand, guys, this too shall pass. This has not, I love my boy Les Brown. This has not come to stay, my people. This has come to pass. This too shall pass.
Yeah.
So keeping that perspective, keeping gratitude and appreciation, right? Studying the ascended masters, studying Jesus, like really looking at a higher perspective of all this is going to pass. Once you get there, I think you look at things that are eternal. What's eternal? Your faith, your relationships, your friendship. This money thing, it'll come back, right? It always does. I think the biggest key right now would focus on his relationships. One thing we haven't gotten into when you said about credit lines, I'd like to kind of dig a little bit there. Credit lines and also portfolio lenders. Well, credit lines and portfolio lenders are based on relationships. Private money is based on relationships. You can build those now, and yet you'd have been much better at digging the well before you were thirsty. Having those banking relationships. Yeah, were you going to get the best rate? No. But I can call a couple of bank VPs in the celly and they're picking up, hey, yo, Ray, what do you need? Hey, yo, Ray, how's your family? Those are the calls you want to have right now because they have money and they want to lend, but they're not going to someone who's not a proven performer. So these banks, these local community banks, they're still lending. But like my friend GC says, if they don't know you, they ain't going to flows you. And to get and business with small banks is slow. Why? It's relationship driven. What does relationship take? It takes time.
Yeah, 100. Now, if I haven't built those relationships up until this point, I don't have experience. I haven't been in the game for 5, 6, 7 years. I just started. I've done maybe a couple deals, or I was just getting into it, or maybe I've done a couple flips. Now I'm stuck. Now I'm realizing I'm hearing what you guys are saying. I'm getting out. I'm going to start calling now and try to get out of these deals, wholesale what I can, and try to come in.
Well, let's pause right there. Guys, wholesale should be the go-to strategy. If you cannot wholesale deal, you should not be buying it, right? So whenever I bought something, I was always able to wholesale that deal. The reason I bought it, fixed it, and resold it is because I wanted the extra profit, but it was already a steal of a deal. I wasn't trying to do these tweener deals. I see a lot of guys that they can't make the deal work on a wholesale, so they close it, they clean it up, and they put it back in the market. Those tweeners I got murdered on last time.
Yeah,
I think
they blow up. They're like have you guys seen the little bird, the Roadrunner, and then the coyote's chasing him? It's like that Acme bomb blows up in your face. You know what I mean? That's how it is when you on those tweener deals. Make sure you buy right, and how you know if you can wholesale. If the market tells you that there's a buyer for cash, that's how you know. So I would focus on raising capital, private capital, and I would wholesale as much as you can.
I agree.
And this, also, one more thought there. I see a lot of guys get amped up on this. Yo, Ray, bro, I'm gonna just highlight them. Yo, Ray, bro, I'm making a 30 grand, 40 grand rip on this wholeale. You do that when the market's hot. Regular market, you're looking at 4 or 5 G's, 10 maybe. So your expectations, and if you have high overhead because you got fat during the other cycle, get lean.
Yeah, I was gonna say that. The days of those $15,000, $20,000, $25,000 wholesale fees come back to reality right now. If you can get 2, you can get 3. Those up. I was selling foreclosures for banks. I was making $1 per deal, but guess what? I was selling 100, 200 a year, right? 1,500 per deal. I'll take it all day long, right? So take your expectations of what you think you ever deserved on the deal. Don't do it unless $1,000 or more. Screw that, man. If you make $2 grand on the deal, stack those $2 grand up, right? Stack it up, stack it up, stack it up. Go find people who are buying. Find the guys and the girls who have money, right? Find out what they want, first of all. You can't buy deals. Find out what they go. Find those deals for them, and whatever you get them, right?
Amen.
We get paid. Think about it, $2,000 on an assignment fee is a lot of money for what you're doing. For what you let's not sit there. Took us a ton of hours to get that deal wrapped up. Get that 2,000 in and keep moving to the next one and keep stacking those up.
I would agree. And also, J Money, as this market changes, you now have what I call alligator buyers, Warren Buffett buyers. The buyers that were buying with this Wall Street money, everything else, they're gone. So what you got is the old timers like Ray. Yeah. Oh, you want to make that much? Yeah. I don't care what you make. I never looked at somebody else's pocket. But if I'm buying and I have cash and I'm coming on cash, this is my number. You want it? Cool. If not, I buy at my price. Doesn't make, because remember the golden rule. He who has the gold makes the rules.
100%. And where I was getting on the question, Ray, if someone's going to approach you right now, they don't have the track record, they don't have necessarily the experience, but they have the hustle, they have the right mindset. What's the best way to make moves in this market right now? If they're trying to approach somebody like you somewhat, or they're trying to approach their friends and family to gather some liquidity to be able to add value and take advantage of the opportunities that are coming.
I think you just nailed it, brother. My man, yo, Ray, J Money, how do I add value to you? Like, Ray, what would make sense? And be generous. See, in the past, you could be less generous. Now you have to be more generous. Hey, Ray, I've got a deal. Listen, I need some money, Ray. Not only will I pay you the hard money, but then I'll split the profit with you. How's that? Hey, and I'll put some of my own money in it too. Guys, when I first started, I did deals like that. I had one of the hard money lenders. I said, look, I don't have anything. I'm willing to hustle. You put up the money. I'll do all the work, and then not only will I pay you the hard money, but then I'll split the profits with you.
Yeah,
and that's what I did, guys. But again, I see of like, hey, how do we do less versus how do we do more together? How do we split up the pie so we can all make more together? See, guys are concerned with Kevin. How do I cut a pizza? And what I want to do with these guys is how do we build a pizza factory? The challenge is most of these guys are so limited mindset. They're so focused, and I work with a lot of these guys. They're so focused on, hey, what is Ray costing me versus, dude, what am I getting? I never look at somebody else's pocket, but like, let's keep it 100. Like if this is not the time to be greedy, especially if you're starting out. Like this idea of the elephant and the elephant and the ant, right? If I'm the elephant, let's keep the perspective. I've got the one, and again, I'm not judging you. Just if I've got the balance sheet and you need something, let's figure it out together. But let's build out how we build a pizza factory together and be generous to each other, and how we make more. Not, hey, whoa, we just made $100,000 and you're gonna keep 50 of it, dude. Why didn't you look at the 50 you made? That wasn't possible because if I wasn't in there, you wouldn't have made nothing. But rather than focusing on that, they focus on what they paid. So people focus on the cost versus the investment.
Yeah, that's right.
I think we're entering an era where humility is gonna be very important, right? We're in a social media where everybody wants to be, I'm this guy, I'm that, being humbled. Like people are being humbled, and you get humility quickly where you realize, wow, I might need that person for this. I don't need all this, right? We're all being humbled, and humility is going to win at the end of the day. Those who have humility are going to be ones, and those who have been practicing humility the whole time, I think, are going to come out on top.
I think humility is one of these huge things. I mean, every book I'm reading right now talks a lot about that, and even the Ascended Masters, right? The master isn't the one who knows it all. The master is the one that has mastered the art of always being the student. I mean, that's right out of Jesus's mouth. Like, I'm just master being a student, and I'm always the student. So that keeps you humble and it keeps you in check.
Yeah, 1000%, guys. I think the message has been loud and clear in this episode. I think right now, this is not going to be something that's going to be over in a couple weeks. We've said that loud and clear. The news, the facts, the numbers are showing that we're going to be in this for a while. So,
one second there, Kevin. I want to get your opinion on this. Do you think this will get tighter?
Yeah, because at the end of the day, the third and fourth quarter of this year is going to be huge to see where those defaults actually go. I mean, how long are we talking? How fast can people start working again? How fast can people get back on their feet? And the longer this takes, I mean, right now, today is April 15th, this tax day.
Tax day, baby.
Tax day. Usually the government's collecting today. The government's not even collecting today. Like, let's put it in perspective. This is This is Uncle Sam's payday, and he's not getting paid right now. That's the reality. So once we know that, are we going to be in 20, 30% unemployment, or is it going to be better than hopefully those numbers? How fast?
Hold on, let's back up a second. Let's say you do get unemployment and you're getting the additional $600 a week for 39 weeks that you're giving, plus your regular unemployment, right, J Money? So you might be getting $800-900 a week.
Well, the 600 additional is only for 13 weeks.
For 13
the rest of it is for 39.
So let's say you can milk that out. I think a lot of people aren't going back, or they're going to try and find side hustles because you got this basic thing met. Now, I'm good with that, guys, because I built my businesses on that. So again, we go back to where we started. What are you going to use this time for? You're going to invest in your guys. The single best investment you can ever make is in you, in yourself, and growing that mindset. What skill are you going to develop? What relationships are you going to do? Are you going to build this time to kind of, build out yourself, build your relationships, build your network? So I think that's the biggest thing. So I think this takes longer because a lot of these people aren't coming back to work.
I got a couple questions here from the people. Number one, what's the book that you're reading, Ray? And what's the book that you're reading, Jory? What's the name?
Ray, go ahead.
Oh, I'm reading the Bible, and I'm also reading The Way of Mastery by the Shanti Crystal Foundation. I'm reading those two books at the same time.
The book I discussed was called Black Fortunes. Black Fortunes.
Black Fortunes.
We all read the Bible. Make sure you read the Bible every day. That's really important right now. The lessons in there. I said read the Bible every day. That's very important.
Dude, the Bible's been, and again, I read a lot of stuff. I'm just really studying. I'm studying Ascended Masters, and I'm not studying what they said. I'm studying how they lived. Because if we can embody, I think what's happening, Kevin. So we'll get into this now. I do want to talk about this, but let me just wrap up with one thing I didn't share. Guys, there's only two reasons properties don't sell. One is the price. Two, it didn't market properly. There's no other reason properties don't sell. So stay on top of that. What I think is happening high level, Kev, you know me, I'm a spiritual.
Before you get into that, there's actually a question about that. What about land?
Guys, I one of the things Kevin and I spoke about yesterday, I made a big investment with some guys that had a proven track record on a land deal. I never lend on land. And it's probably one of my biggest concerns right now because land doesn't cash flow. And guess what? Builders, and I wrote a whole 6-page paper on this to the investors, Kevin, I shared it with you and Jory. And I shared with them, I said, guys, if I'm a developer and I still like the land deal, I'm gonna put a put option on it. I'm gonna go out there and say, hey, I'll give you a low deposit, give me 90 days to close. And I'll see what happens. If 90 days it turns around, I'll close. If not, keep the money. I'd rather lose $200,000 or $300,000 than $3 or $4 million. And again, building right now is the highest risk in the market. It's always been the highest risk. And if we are correct that deflation and lower prices are coming from supply and demand, why not just buy something that cash flows below replacement cost and mitigate the risk versus build new?
100%.
Market, you got that build cycle of 18, 24 months, and you don't know what's coming. Why take on that risk? And the debt for land deals are usually personal. You're signing personal recourse, much harder to get because Wall Street's not funding that. So you're going to put a lot of your money into that deal, sign a PG, and then build with no cash flow for 18 to 24 months, plus the lease up.
And it's the first thing to take a hit.
Yeah, it is. I think you can buy land at the bottom of the cycle is where you pick up some land. If you're capitalized, if you have some reserves, you want to get some land, you wait till the cycle drops. Right now, it's not time to
agree. And maybe buy a covered land play. I know a lot of guys in Texas. I got a couple of guys that buy a lot of industrial land. Well, they put a bunch of cows and they hire a farmer, so at least the land covered itself.
Exactly. Yeah.
Right. Exactly. So you don't do a naked land play where you're out the pocket every single month, guys. This negative cash flow. That's the alligator you want to stay away from. The alligator you want to be is Buffett. What is Buffett doing? He's sitting on a ton of money, a couple hundred million.
He's sitting on cash big time.
Yeah. And he only buys when it meets his terms. Dude, he got Goldman Sachs to give him stock at a discount, and he got reps and warrants. Dude, Goldman Sachs is usually the one issuing that. He got it from them. He got it from when I used to work at GE and Goldman bailed us out. Dude, he got GE to bend over and we'll sign, like, you know what I mean? So there's going to be great opportunities.
Cash is king.
Cash is king. Manage day to day. So again, Adjust daily. Look at the cards you're dealt. Make sure you study the market every single day. Be adjustable. I understand that we're shifting. We have shifted already to a buyer's market. Accept that. Excuse me, to a what is it? Yeah, buyer's market. Yeah. So working with the buyers has become much more important, guys, and making sure that buyer qualified. The buyers are gold right now. Deals are going to be everywhere. Yeah. The buyers and money.
Are money wires being held up depending on the deals? I mean, a lot of private money wires were held up. Commercial, I just had one of my smaller commercial lenders pull out this week, even on deals that they already had approved and committed to. Right now, the conventional, the FHA and the VA, they're still funding. But regular traditional commercial regular traditional banking wires, they're not necessarily being held up. Just banks right now are slammed on all angles, on the lending side, on the taking on customer service side, because everyone's calling, trying to renegotiate, put their payments on forbearance. People are right now, they're shifting their teams, shifting their efficiency, their processes, their SOPs. So overall, banks are running on a much slower efficiency speed than usual.
You have that relationship. Hey, yo, Mr. Private Banker, I need this PPP put in front of everybody. Can you help me? Yeah, Ray, I got you.
Yeah.
Right? So if you have the relationships are so critical right now. I think the other thing is what we spoke about yesterday, we didn't mention, is lines of credits. It's hard to get a line of credit now, if not impossible. But if you have one already, I would be a fan of pulling it now sooner rather than later, or refinancing so that you have the liquidity, unless that line of credit is secured by something. But if it's an unsecured line of credit, I remember those getting pulled from me in 08 by Bank of America.
And even secured ones, because in secured, they saw that you didn't have usage. They said, hey, I know you thought you had $100,000 there availability. We're cutting it down to your balance.
Yeah. Yeah, I mean, it may happen, it may not. I think you're in a much better position if it's collateralized by something.
I'd pull it right now. I'd pull it and put it in my bank, because at the end of the day, I'd rather pay a couple $100 on interest on it and see how the next 90 days play out than they send me an email. Like I said from the beginning, I hope I'm wrong, but I'd rather pay $3,000 and have 100,000, 300,000, 30,000, whatever it may be on my side. And then, you know what? Oh, I didn't need it. Things are back to normal. It wasn't as bad as we thought. Okay, cool. Here you go. That conservative decision just cost me a couple dollars.
No, you're buying insurance. Your logic is irrefutable.
100%. All right. So on the higher level, on the real true.
Let's talk about that, because someone asked about mobile home parks. Guys, right now, what you want to be investing in, if you are going to be investing, is in necessities, not amenities, not luxuries. So housing will do well. Affordable housing. Parks will do well. Oh, let's do self-storage. I'm not saying it's a bad deal, but if I have to choose whether to keep my home somewhere, I'm going to choose the home. So what else am I seeing guys invest in? Like retail, that's not the time. Industrial, maybe, because I think Amazon is crushing it. I think industrial is going to do very, very well. So where are you? But I think housing is supported by the federal government. Even look at something as, I got a couple of guys that I know well that do a lot of student housing. Guess what Fannie and Freddie did on the agency side? Hey, we only have a limit for student housing, and it's not a necessity. It's not a necessity. Necessity is middle class, BC, workforce housing. That's what they're going to give money to. That's what they've always given money to.
Student sellers right now are calling. They're getting hit. If you have student housing, either residential homes or multifamilies, they're taking a hit right now. A lot of colleges are empty. And
well, not only they're empty. So the guys I've talked to that have a lot of these units, so that maybe 50% of their portfolio is made up of student housing. Their biggest concern is they're actually getting collections because they're good operators. So like right now, the people that are going to make through this are great operators. It's who can turn the crank. But also, what if, guys, J Money and Kev, what if the whole school system changes? And what if, worst case, they don't start fall semester? That is game changer.
I've said that already times, guys. for colleges, first of all, that whole model, all right, we're student loans, the whole model was broken, right? You're seeing right now, have to go away to college, live in the dorm, live on vacation, succeed in business. That model's gonna take a hit, right? That and then follow with how many corporations right now are figuring out how to operate with half the employee base, right? Half the employee base, and they're trying to us. So those two right there are we gonna see a huge hit. I mean, college.
So this is the shift now. Great point, J Money, of what I wrote in the article that I sent to you guys, going from a third dimension reality to a fifth dimension reality. What's trying to happen in the universe, the whole Earth, Mother Earth, she's evolving. She's going to a new vibration. And everyone in here is being forced to go to that new vibration, whether you want to or not. Can we go elegantly? Can we go gracefully? Can we grow and expand and evolve as a collective? We're going from right and wrong in a division and a separation consciousness to a unity consciousness. To my father and I are one. To there's a collective consciousness. To what serves the greater good. That's where we're going. That's where this is going to go to. Now, are there going to be corporations that try and fight this? Absolutely. The Federal Reserve is one of the first ones that's got to go. Because clearly the whole monetary economic system is not working. And guys, I'm not a Democrat nor a Republican. I'm a guy from the heart. When you have 80% of this pie, 90% of this pie controlled by 1%, that system does not work. This is not the capitalism that I signed up for. Now, capitalism does work when it's left alone. But what you have right now is nationalism. And where we're going to is fascism, where the government is bailing, the government and the Federal Reserve are bailing out the corporations. They bailed out the banks. Now they're going to bail out the corporations. Then they're going to bail out the pension funds. Like, where are we going? Yeah. So I think that's dying. J Money, look at the other system that's dying. The hospital system, the healthcare system. That is a defunct, reactionary system. Nothing in that system is proactive. Nothing is holistic. Everything is reactionary. How can we give you a pill? Big Pharma runs that. It's not sustainable. Schooling. These kids are coming out with massive debt that they cannot file bankruptcy on. And then they get a degree. They're in debt for hundreds of thousands of dollars, and they don't know anything.
They don't know anything. No, they don't know anything. That's the whole point. They're learning that we're not being taught anything, but we're paying this money. We're paying for tuition, for food, housing. We can learn all this. We can go online for free. We go to YouTube University. Teaching us more than I can find my own.
Amen. But that's also going to happen throughout the educational system. I think you're going to see a lot of homeschooling. I think you're going to see a lot of different things because what you go to a traditional school, it doesn't work. There's no personal growth. There's no development. There's no outside the box thinking. That, dude, no one, Kevin, the reason we spoke about yesterday, why do people struggle financially? Well, they got no financial skill sets. They don't know how to balance a checkbook. They're not looking at balance sheets. They're not looking at P&L. They don't get accounts reconciled. They don't know where they stand every single month. They don't know how to first forget looking and analyzing a financial statement and seeing what the data is telling them so that they can make better decisions. They don't know what's going on. Dude, this is out the good book. You got what do you call it? What does Jesus call it? He calls them blind. You got blind leaders. Yeah. You got blind leaders. Where are they going?
Yeah, right? I mean, a lot of people right now are running to the government, demanding to be saved, and blaming someone else. And instead of looking in the mirror and saying, what decisions have I made in the last 12 months that have put me into the situation that I'm in right now that is causing me so desperately to need the help from Uncle Sam?
Kevin, but that requires personal responsibility. So at the core of this, the most important thing we're going to share with you, all of us, is everything that shows up in my life, not only did I attract it, it's here to serve me, and I am responsible, is accepting 100% responsibility for anything that shows up is my creation. I created this thought of lack. I created this thought of this misperception, this illusion that I had to hustle and work hard, and every dollar is a grind. And because I don't feel worthy on the inside, I have to go spend this money on illusions to try and make me feel worthy. Like what? Retail therapy. Let me go out buy let me buy the Bentley. Yo, let me roll up on this G money just because I got the money. What are you doing? Yeah. Why not make it so you don't have to fake it? Oh, fake it so you make it. No, make it. Make it.
And when you make it, you don't even have to fake it. You're not even there. You're not even in that world, bro. Listen,
it just is. It's who you are.
Yeah. 100%.
We're seeing transition. I agree totally with that.
Yeah, and I think one of the big things that's changing right now that's amazing is this whole work-life balance. It used to be a work-life balance. We're going to a life-work balance. And I think it's magical. I think we're going to be able to do more with less, much faster. Matter of fact, I know it's happening.
Oh, I got clients of mine right now trying to figure out how they can get out of their leases because they've realized that the working from home and the virtual team is actually something that they were forced into, but they think now they can make it work and save $10,000 a month that they didn't need before. And they would have never found that. They would have never even had that thought because it was business as usual. In the rat race, grinding, and you don't even think twice about it. But now I've had plenty of those conversations of, you know what, we might keep things in a certain way virtual. We might keep this new system.
Yeah, we're going back to a new normal. It's not going to be the old normal. And I think office gets killed on this. I think so does retail because a lot of things are being delivered. I mean, this is changing the way we eat. Like right now, we used to cook a lot of food. Well, guess what? Right now, Uber Eats is a lot better. I don't have to go do all this. I don't have to leave the house. So really, I'm buying back my time, right? So this becomes much more important. I think something else that's magical, Kevin, is a book called Secrets of the Millionaire Mind by T. Harv Eker.
Yeah, for
Guys,
sure.
When Jesus talked about look at the fruit the tree produces, right? But then within that, what determines what fruit the tree produces? The roots. So what this book is going to allow you to do is to go look at those roots, which is inward. Guys, the inside game always determines the outside game. Every dollar you ever made came from you. You are the source of that money. And you are abundant, and you are successful, and you are safety, and you are security. That you have to own that shit inside first, and then abundance comes. You are abundance. And then it comes. If you chase abundance from a place of lack, from a place of needing it to fill you up, I will tell you from personal experience, no matter how many millions you have, no matter how many things you do, you're not going to be fulfilled. You cannot have a happy ending. You cannot have a road filled with hustle, grind, efforting, and then somewhere else later I'll be happy. Enjoy the ride. Happiness, my boy Wayne Dyer, happiness is the way.
Yeah. I said it to Kevin, remember? I said, I just feel content. You got to feel content and wherever you're at, like not finished, you have to have that content and that joy, that peace, right? Peace that surpasses all understanding. It doesn't matter what's going on around me. I'm peaceful. I'm happy. I have joy. I'm content. I'm going to keep creating, right? But whatever I got right now, I'm good with. I'll just keep creating as I go, you know. And that's what I think.
Imagine, J Money. I love what you said. It was beautifully said. Imagine if we truly create from that place, J Money, versus the place that we used to create from, where there's a freaking saber-toothed tiger right behind me, but I don't want to accept K-Love I don't want to accept personal responsibility, and I'm afraid to look at that dang saber-toothed tiger in the eye. But you know what happens when you sit down and meditate and pray with that saber-toothed tiger? You realize that you're beyond that. It's just an illusion. Do not be afraid. Dude, all over the dang Bible, do not be afraid. Do not be afraid. Look at the tiger in the eye. I'm not saying avoid fear. I'm saying embrace fear. I'm saying this time you have two choices, love or fear. Love, guys. Choose love every time. And love is even stronger than faith because love can look at the fear and still embrace and make space for the fear. So embrace the fear, dance with the fear, and then forgive yourself for having that illusion. And shit, you forgive yourself, the Holy Spirit will come do that bitch for you. Just open it up.
Definitely.
Yeah. This is not about the mistakes you've made and the investments you've made and the purchases you've made and the spending you've made and let it bring you down. It's to awaken you. It's to decide and declare that today is the last day and tomorrow is the beginning of this new world that we're all going to get a chance to be a part of. This is the beautiful part about what we're going through. Well, guys, financially and personally.
Yeah, and we chose this, guys, before we all manifested down into physical form, because we're the thought of love and form. Before we came down, we said, hey, we want to be part of this. This is going to be fun. We're going to get to grow through this. Guys, there's no accidents in the universe. If you're here during this time, it's for a reason, guys.
Yeah.
So lead with love, guys. Definitely. That's the magic in this. And I think once we get to the other side of this, there's going to be a lot of that.
Yeah, I agree. That's the sunshine.
There's going to be so much opportunity, right? We all know what happens. Transfers of wealth are going to be happening, right? So if you're sitting out there like, hey, I want to be able to be that spot, my family's taking care of for generations. That's what happens out of this, right? If you can maneuver correctly, we've all been here. You know, you did a wonderful job, before. You can create that generational wealth through these times, right? And it's an opportunity for things to reset if you get the shot to come into. A lot of real estate is overpriced. You couldn't even get in, right? A lot of people can get into this game now because of what's going to happen with the economy. So you got to have perspective on what's going on and take the right perspective.
Let's end with an actionable step.
Give me 1 second on that, brother, because I want to elaborate a little bit more on what Jay Money said. Dude, Jay, like one of the things, I'm a big fan of external abundance and wealth and money and generational wealth, but I'm also a fan of not only just leaving a legacy with what generational wealth is. Dude, what if we get to actually live a legacy too and change the whole collective and not just build treasures here, but lay them up in heaven, right? Where moth and dust cannot corrupt, right? What if we did both and impacted people and changed people's lives? Definitely. That's where I think this is going. Definitely. Both.
100%.
That's where the magic is in my world.
100%. Actionable step I want to leave you guys with. We did about 1 hour and 15 because this was a lot going on, a lot to say from a both numbers perspective, internal perspective. If you're listening to this and it resonates and you want to be ahead of the curve, if you want to understand what the cycles are for both your personal life and your financial life, share this talk with as many people in your network as possible, and then jump on a Zoom call or jump on a conference call together, talk about it and figure it out and figure out what you guys want to do together as a collective, and get in touch with guys like us, bring that energy and bring that value, because realize there is a shift, and let's start the conversation.
And make it a study, guys. Dedicate yourself to it. Make it like, I don't take up studying Jesus lightly. I'm studying him. I'm studying the way he lived. Like, make this a study. If you want to do well in finance, make it a study. You want to build a big bicep, make it a study. You want to build a great body, like study these things. I just don't know how to.
No, you got
fall in love with the process.
Yeah,
become obsessed.
Yeah, become obsessed, man.
Hey, all right, guys. A very good talk, Ray. We appreciate you, brother. Say,
appreciate you, Ray.
Say what's up to the family.
Love you guys. Appreciate you guys.
All right,
Kevin, send me the audio. You heard me?
Yes, sir. I got you.
Love you guys.